Gold prices gaining today for the first time in 4 trading sessions as investors once again turn to the metal, perhaps in order to protect themselves from a weaker dollar and or chaos in Greece. Well, my next guest sees some hotspots in the mining sector right now. Frank Holmes is the Chief Executive and Chief Investment Officer at U.S. Global Investors. He's responsible for more than $3 billion. Frank Holmes, always good to see you. Thanks so much for coming in. So what's this about gold and gold mining shares right now? $1,500 an ounce. There's a seasonality quality to it, but there's something more. You're seeing emerging markets, particularly people in China, they want to own gold.
Wherever you have countries where there's negative real interest rates, like we're seeing in China, India, and America, gold starts to rise in that country's currency. So you're seeing consumers buying it for that fear trade, but at the same time, in much of Asia, it's a love trade, where they buy it for all holiday season giving, for birthdays, for anniversaries, etc. So that's a key component, and usually between now and August is the bottom in this sort of seasonal gold cycle for the love trade.
All right, so a seasonal bottom in the love trade for gold. Does that mean that investors ought to be getting long gold? They ought to be going out and buying some right now?
I think any type of big down days where you see gold drop off $25 like we recently saw in a day, I think that usually provides a good entry point. But what the real opportunity is, and the disconnect, is gold stocks. And this year, if you take a look at like gold equities last year, actively managed gold equity mutual funds, $4 billion went into those funds. This year, $1 billion has left. Now, this is excluding
Why
ETFs.
is
The risk trade, the fear, all stocks are being treated equally. So gold stocks are being knocked down when they're trading at the lowest multiples in years on a price to NAV, on a price to cash flow, and many of them, to compete with the bullion ETF, are raising dividends. Goldcorp, monthly dividends, raising them again. Newmont, complete new structure of dividends related to the rising price of gold.
So that's unusual that you would actually get paid to own a gold stock, because typically, or in historical terms, you would always buy a gold stock thinking that it would somehow mimic the price of gold. And you're saying you're going to get paid to wait now, too.
And it used to be the leverage, the 3-to-1 leverage.
Right.
And
they've
now,
taken off all those hedges.
So now you're seeing a complete different positioning in the landscape. And I think it provides a great opportunity to buy these gold stocks, because when gold starts to have these moves like we had last year, remember last fall, that's when we had the QE2, which is the fear trade, show up with the love trade out of India, the season of lights. Combined together, gold hits a new high. You get these factors coming together, then I think the next time you're going to see gold stocks actually outperform bullion like historically they have.
All right, now you mentioned Goldcorp, you mentioned Newmont as companies paying a dividend, changing the way in which they allocate the capital, some to the shareholder. How about smaller gold companies? Because, people are always looking to try to, cash in on something that isn't in the headlines right now.
Well, small caps as a whole have taken it on the chin in these past 4 months. And gold stocks themselves, the smaller cap ones, have also taken it on the chin. So the little companies like Gran Colombia's merged with Maduro, now it's called Gran Colombia, has a $300 million market cap, producing over 100,000 ounces of high quality gold, like 9 grams, versus Barrick produces for gold for 1.5 grams. But you have something that has like 11 million ounces to be developed. So I think companies like that will probably see something evolve, or they'll be taken over, or they'll be re-rated in the marketplace. I think that they provide opportunities in the market.
Now, I know we're talking about gold, but I want to shift your attention slightly, because I know you know a lot about oil as well. Oil, $90 a barrel right now. Would you be buying any oil stocks?
Oil is really interesting because historically, this is a season for oil to rise. And over the past 60 trading days, oil is down on our mathematical models with the dollar. So it's really bizarre to see that oil is down like 1.5 standard deviations. Not to confuse everyone, but mathematically, it's usually a great time to buy.
So it's a question mark as to why this happens, and you say good time to buy.
Policies. It's government policies. But if oil...
That release of all of those stockpiles.
And guess who's going to benefit? It's going to benefit India and China, who are net consumers of oil also.
Well, they'll benefit investors, I guess, also, if that turns out to be the case. And they listen to you. Thank you very much. Frank Holmes, U.S. Global Investors, responsible for about $3 billion in assets.